It doesn't happen very often, but it happened today. The stock market plunged in reaction to good news. The news from the head of the Federal Reserve was that the economy is doing better. Here's the part Wall Street did not like. Ben Bernanke said the economy is doing well enough that the Fed is likely to ease back on one of its stimulus programs, a bond buying program that has helped keep interest rates at record lows. The prospect of higher rates sent the Dow down more than 200 points to close at 15,112. Reason enough to call in our senior business correspondent, Anthony Mason. Anthony?
Scott, the downside risks have diminished since the fall, Bernanke said today, in an assessment of the economy that has turned noticeably more upbeat.
Generally speaking, financial conditions are improving.
The Fed lowered its forecast for the unemployment rate across the board by about 1/4 of a point to about 7.25% by the end of this year and to about 6% by the end of 2015. The main headwinds for the economy, in the Fed's view, come from Washington, where budget cuts are restraining growth.
Our judgment is that, given that very heavy headwind, the fact that the economy is still moving ahead at least a moderate pace is indicative that the underlying factors are improving.
If that continues, Bernanke said, the Fed will start to taper its stimulus program later this year. But interest rates will remain low. Most Fed governors don't expect to start raising rates again until at least 2015.
The Fed chairman's term ends in January. President Obama said this week Bernanke has already stayed longer than he was supposed to. But Scott, Bernanke would not say anything today about his personal plans.
Anthony, thanks very much.